One of the things that makes the Rich Dad Company different is most people think that savings is smart, but my rich dad told me years ago that savers are losers. Now, I know this goes against the grain of what most people tell you, save money, save money, save money. But the reason savers are losers began back in 1971. And in 1971, President Nixon took the U.S. off the gold standard and made the U.S. dollar the reserve currency of the world. One of the reasons we have so much economic volatility in our economies today, high gas prices, high food prices, stock market booms and busts, housing values going down, all can be attributed back to 1971. Plus, there are other changes. So what makes the Rich Dad Company different is that we do not really subscribe to the idea of being a saver. We think it's more important you learn to be an investor. Like if you had invested in oil 10 years ago, you'd be a rich person today, even though savers are losers. If you invested in gold 10 years ago, you would have been a lot better off. If you had invested in rental real estate 10 years ago, you would have been way ahead of the savers. So if you want to get ahead, you need to not be a saver, but learn to be an entrepreneur or an investor.
When I was just 9 years old, my rich dad began to teach me how to become a real estate investor. And the way he taught me was through that game most of us know about, the game called Monopoly. And he said, son, on this game board Monopoly is the formula for great wealth. And most of us know that formula. It's 4 greenhouses, 1 red hotel. 4 greenhouses, 1 red hotel. And that's how my real estate investment career began, with that simple education and lessons from my rich dad. And that is why I was able to retire in 1994 at a relatively young age of 47 because of the simple investment steps my rich dad taught me. So there's 4 great advantages to real estate as an investment. Number 1 is you have income every month, which means you can soon quit your job if you want to. Number 2 is that you have tax advantages. There's so many tax advantages too. Number 3 is you have depreciation, right, which is another form of tax advantage. And number 4 is you have capital gains. So you have money coming in, government's giving all these bonuses, right. You have all these gains that are somewhat tax-free, and on top of all that is the banker will lend you money for real estate. In any market, markets move up, markets move down, and markets move sideways. They're called trends. So what you want to look for is the area, hopefully, that's moving up. Would you agree with that?
Totally, yes.
Like we always talked about, there's some cities where people are moving out of.
They're in decline.
Right, and people are moving into.
Right.
And generally, where would you rather invest?
Well, obviously where people are moving into. But the interesting thing is, unlike the stock market, where it's very difficult to know which markets are going to go up and which areas of that market are going to go down, with real estate, you can follow the trends because they're so slow to evolve. A city that's had high growth in one year is likely to have had high growth the year before and will have high growth the following year, and similarly those with slow growth. So it's very easy to figure out which cities and which suburbs within cities and which clusters of streets within suburbs are likely to do well in the future just by watching the past. And you don't get that luxury with many other markets. They're far more fickle and volatile.
Right. So in any market, any investment, you have to watch the trends. There's always 3 trends, up, down, and sideways. Another way people become very successful in choosing the area first is sometimes you look for an area that's been down for years, and suddenly it comes back to life again. Those are really good, aren't they?
They're great, and the trick is finding when it's at the bottom, because then it's about to take off.
And the prices are really low.
Prices are low. Most people make the mistake of buying when it's at the top. They think, wow, this is going really well, and they buy at that peak, and then the only way to go along is sideways or down again.
Right. And if you're just starting out, let me give you one more tip that I learned the hard way. My first investment property I bought on another island, in the island from Hawaii. So I had a problem in this piece of property. It meant I had to catch a plane, fly there, rent a car, and go check my property. And so this problem persisted for a while, and so for 2 days a week, I was getting on a plane, flying to another island, renting a car, look at this property. So that added to the next thing. If you're going to find an area, make sure it's close to your house. And so I would recommend this, is find an area that you can even walk to. In my book, I talk about how the first investment property that Kim and I bought together, I used to jog past this neighborhood. So if it's close enough to jog to, it's close enough. It's a great area. or find an area that you can drive when you're, going back and forth to work. The reason is when you're first starting out, you're bound to make a few mistakes. So make sure the area is close by. It's another good choice. Area that you want to invest in, hopefully one that's going up. At that point, you begin looking at properties, the actual sticks and bricks, as I call it. Now, Dolph, do you care if the property is ugly?
Not only do I not care, I like it if the property is ugly.
You like problems, right?
Well, they're not problems to me, they're challenges. You see, if there are problems, they're perceived problems, then everyone else values that property very lowly.
Right.
But I know that for a very small expenditure, I can massively increase the value of that property. So I love challenges.
Right. So that's why I say to people, fall in love with the area, but not necessarily the house. In fact, a lot of times I look for the best area with the ugliest house.
Right.
And only at that point do I start looking at multiple properties. I don't want to get attached to any one. Is that correct?
Correct. And you have to look at a lot of properties. People make the mistake of looking at 2 or 3 and trying to make a decision. You've got to look at dozens and dozens, and all of a sudden one will pop out as being spectacular.
Yeah, sometimes you walk into a property that's not even listed just because you're looking around the area.
Right. It might be for sale by owner or something like that, or people hear that you're looking to say, well, actually, my cousin's got one for sale. I wonder what he wants for it.
Right. So after you find this area, you become this expert, and once you become this expert, let's say you're jogging or riding your bike around and everybody knows you're looking for investments, suddenly people start giving you all these great deals on these properties. So that's the next step. After you've identified the area, then you start looking for the properties, and oftentimes I don't really care if they're bad. In fact, some of them can be too bad or too broken, but you're looking for problems sometimes, or sometimes they don't have to be a problem, it's just great deals.
Well, I'll say it again. In 1973, I came back from Vietnam, and I was a pilot out there. And I took a real estate course. It was $385, 3 days long. And that was a lot of money back then. I was only making $500 a month, so $385 was all I had. And the instructor at the end of the program said to me, he said, or to the whole class of about 30 of us, he says, your education begins now that you leave the class. You didn't get educated while the class. So his assignment was that everybody, or 30 of us, we had to pair up in team, get up in teams, two or three at a team, and we had to look at 100 properties in 90 days. And he says, don't buy anything, just look at 100 properties, do your evaluation of each property, write a short blurb about it, why it's good, why it's bad. And it's at the end of 90 days and 100 properties, then you make up your mind if you're going to buy something. He says, if you haven't found one property in 100 deals, you start again. You start again with another 100. And that's why most people are not rich, is they're not willing to go through that process of looking at 100 deals to find one deal. And there's sometimes, and you and I know, you look at a lot of frogs to find one princess. But when you find that one princess, everybody goes, oh, well, how do you get so lucky? Well, I looked at a lot of dirt dogs out there, Mm-hmm. And that's like anything in life. You don't marry the first man or woman you meet. Hopefully you kiss a couple of them, before you do. One of the most famous ways people use options is a down payment. So let's say I'm going to buy a house for, let's say, $100,000. And I go and I put $10,000 down. Some people call this a down payment, but what this $10,000 means to, and then the bank gives me $90,000. Going to use the banker's money to get rich. The reason I look at this as an option more than anything else is because if the price goes to $120,000, I now have the option to sell it for a higher price. The risk is if it goes down, then I can't get in trouble. As that's true with any kind of option. So that's one of the ways that options are used in real estate. And again, for me, from my perspective on it, a real estate down payment is an option to either buy this property later on or refinance it, and the beauty of real estate is this: if the price of this property goes up, the bank still only gets $90,000. Let's say it goes to $150,000, you get the $50,000, but the bank still gets the $90,000. That's why I absolutely love real estate, and I love the idea of options in it. Another way an option can be used is you can go up to a seller, if somebody has a house, and say, look, in 3 years, I want to buy your house for $10,000 or something like, $10,000 more than you owe right now, and here's my paper, but just give me the first right to buy it. And you don't have to, generally have to give them something like $1,000 for that right for that option. That's another way it's used. Another way options are used in real estate, which I use quite often, is let's say I go up to a project and they say, we're going to break ground in 1 year on this apartment or condominium project, and you can buy a condominium right now before it's even built. So it's called a pre-construction purchase. It's also called buying off the plans. In other words, and I don't recommend this wholeheartedly, but off the plans means the building's not even built yet. But you go up to the developer because they have to sell so many of these projects. They have to sell so many units or get so many buyers committed to them. So let's say I give them $1,000 down. The price is $50,000 today. And 3 years from now, when the project is completed, the project's worth $150,000. At that point, I don't have to buy the project. I don't have to finance this $150,000. What I can do is just basically sell my position, my option to somebody else for the $100,000, and they can buy the property also. So I do all these types of options in real estate, and even at right now, I'm buying 6 units off the plans. The buildings aren't even built yet, but I'm putting an option down, and in 3 years, hopefully, and this is called speculation, not investing, because I'm speculating the price will go up. The option just assures me there's a certain price today, and I'm betting that the price will be higher in the future. So these are the types of ways options are used in real estate also.
As an additional point, I'd like to add that when you're finding your area and identifying pieces of real estate, this is where your broker becomes very important. Not all brokers are equal. Not all brokers have the same intelligence. As you're going through the area and looking at different properties, you'll soon find out the brokers you like and brokers who like you, right?
Right.
And then also, not all brokers work with investors. Most of them work with home buyers, especially the first time, so there's, the kitchen's important, how pretty is the paint and all that. Well, we don't care about that. So on top of finding the right broker, you have to find one that understands you and hopefully is an investor himself or herself.
Right. Most brokers that understand you, that have the same mentality, are investors. And don't ever be put off by a broker who is an investor. Don't think, well, if there's any good deal that comes along, he'll take it for himself. No broker can buy every deal that comes across his desk.
Yeah.
The advantage of a broker that does invest is he understands the mentality, he understands what we're after, that we don't care whether the deli on the corner is good or not. We just want a good deal.
Yeah, investors think different than home buyers. Real estate agents focus on the house and not the market. So what I'm watching for, listening for, hoping to hear is I have a real estate broker who is the same thing with me, is they're looking at the area first, the property second.
Exactly.
And when you find a good broker, pay them well. I meet so many people who will tip their waiter 20%, but try and stiff the broker 6% or whatever the commission is. That's tipping somebody who's costing you money rather than tipping somebody who can make you rich. I like to pay my brokers everything. I like making them rich because they're making me rich too.
What I do, what real estate guys do, is opposite of what stock and currency guys do. Right. So I don't save money. I use in 2007, when the U.S. market went down with the real estate market, my partners and I borrowed $500 million, not rand, dollars. Right. And we bought investment bonds. And it was wonderful. And then what happened a few months ago, 2014, 2015, they also refinanced 5%. Imagine our debt service going down by 50%. So our cash flow went up. Now, when I talk to the average person, I don't care if you're a PhD in economics, they don't understand what it's how can you make money off of debt? And the reason is because that's what the rich really do, is they use debt and taxes to get rich. And the poor and middle class, debt and taxes makes them poor.
How accessible really is real estate investing to the average Joe investor that wants to get away from the mainstream?
It's always the same thing, is that real estate is the best investment of all. There's 2 reasons why real estate is the best investment, time-honored, but you got to be smart at it. The number one reason for real estate is debt. You know, who else is going to give you money to buy? You know, they don't give you money to start a business, or they don't give you money to invest in oil, but they give you money to buy real estate. So debt is the key. So as I cover in my book, Second Chance, debt makes the rich richer. And secondly, taxes make the rich richer. So when I buy real estate, it is the last investment where I can make millions of dollars and pay zero tax legally. So the irony of it is these guys who are investing in the stock market, they don't really have any advantages for debt. There's some little bit. And they have no real tax advantages. That's stupid. So I don't care what you say about good markets or bad markets, good real estate, bad real estate. Real estate is the last great investment. Number one for debt, number two for taxes.